Wow, is this the top? Is this the top that everybody's been waiting for? Is the Trump pump over? Hi, Courtney Smith here with TradeSmith, our weekly video newsletter for Monday, December 19th. Let's get going. This is certainly at the top of everybody's consideration every single week, memorizing it, studying it, and really enjoying it. I personally haven't read it, but I did go to the Broadway show version of this disclaimer. All right, let's get right into this. A lot of things are making me really nervous that this rally that we've had over the last 2 months is over. Let's go through some of the factors right here. Number one, let's start at the top and let's work our way down. Here's the S&P 500. I've been talking about the purple predictor as not being very confirming. Look at the price action over the last week. What we're seeing is it's making lower highs and lower lows. It's diverging from the price action, and I believe that the purple predictor is a leading or coincident indicator, and it's cracking down. Now let's go down to the middle arrow there. Look at the heavy volume. Friday's price action was not that bad. I mean, it closed only a little bit lower. It was an inside day. It was the whole range of the day was inside the range of Thursday. So that just means it was kind of a neutral day, but it occurred on heavy volume. Now, way, way, way down at the bottom, I included a little smidgen of a chart that I hardly ever show. Now, what that is down there is it's an indicator called the ADX. And this was an indicator invented by Wells Wilder back in 1980, if memory serves me right, maybe 79, maybe 78, I don't know. Anyway, and so what I've done is I've adapted it and enhanced it and come up with a technique that I call the bishop. And what it is that when the ADX gets above 40 and then turns down, then that's the end of the bull move. Now, it's right now at 39.61, and quite frankly, if it turns down this week, then definitely this is the top in the market. So it hasn't happened yet, but it's making me very, very nervous. Now let's take a look at the Dow Jones. Similar situation, except that the purple predictor is way more bullish here. The reason, because as we've been talking to you about, it's been the old Dow type stocks that have been the leaders in this market. And the old industrial stocks, the infrastructure stocks, the material stocks, the industrial stocks, those are the stocks that have really, really been helped out by President-elect Donald Trump's, well, we'll see what his policies really are. So that's where the action's been. But I want to show you, well, okay, let's just keep carrying on. NASDAQ, big divergence. Look at the big divergence we've got up here. We made higher highs, but on the RSI, we didn't. Now, this is not super important. All it means is we could sell off for a week. That's about it. Well, that's all I'm looking for. I'm not looking for a crash. I'm not looking for a bear market, none of that sort of stuff, but I am looking for a retracement in this market. I talked about it last week. There's just more and more indications that it's coming up here, probably right now. Okay, but seasonality is bullish. We're still above that red line up there. And if we stay above that red line, I'm going to count seasonality as bullish. But look at down at the very bottom. I told you about the ADX. I told you about the bishop just a minute ago. Well, in this case, the Russell 2000 got above 40 and turned down, and the price has been going straight down ever since that indicator gave you that signal. So on this side, not looking too good. All right, seasonality, this is, we're just looking for this dip. We've been talking about it every week. I don't need to really go into it. But look at the blue line. We're supposed to be dipping here early in December. We are dipping. I think we can get another week out of this dip. And then the last part of December should be very bullish. Now, I want to spend a little bit more time on the yield curve. Now, the yield curve predicts the market a year in advance. But what it really does is it predicts the stock market in two conditions. One is when the yield curve gets to 0. And you can see even down at the low back in July, it got down to just 110. So it didn't give us a sell signal in the marketplace when it got down to that 110 area. Now, but what it does do is you can see that from where the yellow bar is, which is where we are now, until July, the yield curve keeps going down. And in fact, here in January, we see effectively a collapse in the yield curve. And what this does is that it doesn't cause a bear move, but what it does is it puts downward pressure on the market and doesn't allow the market to rally strongly. And so do not look for a strong super bull market in the first half of next year. But then you'll notice in July, August, September, the yield curve kind of goes sideways and then explodes to the upside, thus releasing the pressure of the yield curve and giving the market the opportunity to move sharply higher in the fourth quarter of next year. Asset allocation. Wow, 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 wow. Very, very, very bullish. What can I say? Stock market Riskdicator. Whoa, big change here. This is collapsing. Look at this. All of a sudden, I've been telling you, I'm so nervous about this market. I just believe we're near a high. And here we have another indication. The Riskdicator is coming down, and that's bearish. What it's saying is that people inside the market, the smart money inside the market, are going to safe havens, and they're not trying to make money right now. They're trying to save the money they made from the Trump pump. That's a big change. Global shares, who cares? The Greek market, oh man, I've been calling this market so beautifully, but it kind of crapped out this week on some debt renegotiation news that was not bullish. So still bullish long-term on the Greek market, but clearly this has not worked out as I predicted. But what did turn out as I predicted in a beautiful, beautiful way, because I've been long this for months, Japanese shares on DXJ. We've been long and strong. We got a little bit of a momentum divergence up there, so we might see the Japanese stock market sell off this week, but no big deal. It's a buying opportunity. We're going to see this incredible bull market continue. Bonds, another great call here. I got you short way up at around 137. We're now at 117. That's a huge move in the bond market. And of course, if you're a futures trader, that's $20,000 in profit. But even if you're a TLT stock market trader, that's a 20% gain. There's nothing wrong with that in such a short period of time. Look for bonds to continue to move lower. Look for interest rates to continue to go higher. Now, bond key factors, we now have we've been having the 10-year Treasury yield as being the main thing causing the 10-year Treasury to go up. That's the blue line. But now we're starting to see the CRB, which is the chart. It's starting to move up only a little bit. Now, why that's important is because the CRB tends to be a leading indicator of interest rates. So a higher CRB tends to lead to higher interest rates. So it's now confirming the German rates. What's still bearish? The price of gold is still saying that we should see lower interest rates. But no, we're not. The dollar, another great one. We got in around 96 and small change. We're now at 103. That's about a 7% gain, which is huge. Whenever you look at currencies, a 7% move is a big, big move. This is the biggest move we've had since 2014. It's going to continue. It's going to continue. Why? Let's go back over here. Look at the green line. That's U.S. 10-year treasuries. Look at the blue line. That's German 10-year yields. Look at how the yields in the United States have taken off, how so much higher there are. Well, global money around the world is going to the highest yield, and that's the U.S., and that's one huge reason why we're seeing the dollar rally. And it just last week, I told you, if it breaks those highs, which it did, you've got to buy more. You've got to get into this. I'm jumping up and down here. What can I say? Gold. Why don't you just kiss this stuff goodbye? Melt down your mama's jewelries and just stick it in your teeth. Take out your teeth. I mean, this is a bear market. It's a bear market. I know there's reasons to hold gold in societal collapse reasons, but as a trader and as an investor, that's a different thing. And if you're a trader or an investor, you've got to be getting in and getting out when the going is getting in is good, and when the going is bad, you got to get out. Right now, it's bad. You got to be short gold. If you had shorted gold when I told you to, we got short at 1,300. It's now down around 1,130. That's $170 collapse. There'll come a time when it's bullish again, but now is not that time. Our indicators, 2 out of 3 are bearish. Not that great. Got to stay away from gold. Oil, okay, I've been kind of wrong here. I thought we'd get back up to that 52 area, and you can see we spiked up, got up to 54 and change. We're looking kind of strong here. I got to stay away. I just cannot buy this bull market. And the most important thing is always if you don't understand the market, if it's not acting the way you think it should act, you've got to stand aside. I can't fight the market, that's for sure. Even if I think my analysis is brilliant and the market's going to go down, that doesn't mean anything if the market's still going up. I don't fight the market. Life's too short, and it's very painful when you fight the market. All right, everybody. Love having all you freebies here. And, of course, you really should get the real trades. I know you're going to love them. Just go to that website up at the top. Sign up. We'd love to have you on the fully paid up member section. Talk to you later, everybody. See you next week. Fully paid up members, hang in there just 1 second.